Good morning, traders. Today is on 6th of October. It's a Monday morning. I'm just looking at the financial calendar here. And we just want to go through it, and so that you can be able to know what we are looking ahead for the whole week, so that we can be able to know how we can be able to align ourselves. Because today we do not have much in the forex market. So let's look at the whole week so that we can be able to know which event we are expecting it to be somewhere. So for today, Monday, we had today in the CNY, we have a bank holiday. That is the Chinese bank. It is on a bank holiday. So today there is an event in China. So then at 8 we had ECB President Ligard speaks, and then BOE Governor Bilali speak. So those were today's events that were planned to take place today, but tomorrow we have the CNY bank holiday still. So tomorrow still the CNY will not be much active in the forex market, but I didn't mean it will be dormant. It is still moving even though there is a bank holiday, because even though there is a holiday in our country, we still buy products in our shops, and we still transact money from the banks to sending money from one bank account to another. We still transact. So I don't mean it is dormant. So I mean the banks are closed, not the money. So Tuesday we don't have much. Then we have the moderate impact news, that is the Canadian dollar. The moderate impact, we don't have much stress. We don't need to stress on them much. The Euro president regarding will speak again tomorrow. But on Wednesday we shall be having FOMC meeting. That is on Wednesday. We shall be able to see it. We shall be able to know it. Then we shall be having on Wednesday a tentative data that will take place on we are not sure. We are not sure. BOJ governor whether speaks. It is a tentative, so we are not sure of that, whether it will happen or not happen. So then on Thursday we shall be having another tentative data, that is for the USD unemployment claims. This data was supposed to come out last Thursday, so we didn't see due to the impact of the shutdown in the US government. Then we shall be having another tentative data at still for the US unemployment claims. At the same time, at around 3:30 p.m., we shall be having a speech from the Fed Chair. This is confirmed that it will take place at 3:30 p.m. So that we shall have that speech from him, and he will be able to guide us. And from here, we shall be able to know whether we shall be having the NFP data on Friday 10th. Sorry for that. So that we can be able to align ourselves on Friday. So he will be able to give a speech. In the speech, if the speech will be dovish, we shall be looking for for selling opportunities on gold. If he will be hawkish, we shall be looking for selling opportunities on gold. Also buying opportunities if he will be hawkish. So then on Friday, we shall be having the AUD, that is RBA Governor Bullock speaks, and then 3:30 p.m. we shall be having the Canadian employment change and unemployment rate. Then we shall then the tentative data. If it will be confirmed, it will come exact at 3:30. If we approach or see different information during the weekend. So then we shall be having the 5 p.m. This is not related to the government. So in terms of the prelim UOM consumer sentiment and prelim UOM inflation expectation. This is a matter of the Feds, so that's why you can be able to see it is not a tentative because the government is the one that is closed, but the Fed they are still operating, even though they might be operating without a pay. So as per today, we don't have much, and even tomorrow we don't have much in terms of the US dollar. So the day that you should be seeing a great, maybe a serious event that will take place on Wednesday at 9 p.m. So that's the time that we shall be seeing maybe a serious move of the maybe of the fundamental. So let's have a look on the DXY so that you can be able to know where we are heading to and what we are looking ahead for. So for today, the previous week was very bearish. You can see it was very bearish. It closed as a bearish candle. But as per today, the market closed at this point. At point of 97.749. But the market opened at 97.988. So there is a market open gap. I will be able to explain it in a few, so that you can be able to know what to do anytime that you see this event. So on Friday, the candlestick closed as red candle. That shows there was also some selling pressure in the market. But as per today, we can be able to see the candle is very bullish. But even though it's very bullish in terms of if you can be able to go outside the candlestick and you go to in terms of the other information sources like let me just explain about the gap that has just been seen in the market so that we can be able to have a look on them before even we judge them. It's a bullish or it's a bearish market for today, so that we can be able to know when we are saying it's a bullish market that you are expecting, you can be able to understand why. And when we say that it's a bearish market, you can be able to understand why. I just wanted to explain this. So for today, we have been able to see a large market open gap. Even we can be able to look at them in the currencies. Like in terms of the currencies have opened with huge gaps. So let's have a look on them so that you can be able to be understanding when I'm talking about a financial market open gap. What is it? So this usually happens now and then, but they have a driver. Most of the time, there is something driving that market to open that way. So it's not all it's not just randomness. So let's have a look on the USD JPY. Let's have a look on it so that you can be able to know what to expect and what not to expect. So you can be able to see it that for today, the market has opened with a very huge gap in terms of the USD JPY. It came and touched this order block, and now it was reversing, trying to reverse to go on the upside. So, instead of maybe going continuously, the market opened with a very huge gap of over into some assets. You can be able to find this over 100 pips. Into this asset, you can be able to see is over 158 pips. So that's a very huge gap that has opened with it. And still, even after opening it, you can be able to see the market has continued moving on the upside. So far, you can be able to see until the time that you've been able to see some reversal opportunity is about 280 pips move until we have been able to see a reversal of the market. So the main question is this: why did the market open with that huge gap? Large gaps at the open in the major currencies pair like the Euro USD, USD JPY, GBP USD, etc. are unusual. So they are not usual, are unusual because forex is are traded nearly 24 days, 24 hours in a day, 5 days in a week. So, but do happen most of the time. These events do happen. Like we usually see them. That's the basic information, but we see them due to different information. Maybe a good example when there is some high impact news, we maybe see them. So, why do these gaps happen in the forex market? So first, a gap means that the opening of a trading session or after a low liquidity period, the price starts significantly above or below where it closed previously, with little or no trading in between that gap. You can be able to see there was no trading here in between. But if you are trading, maybe you had closed an order, and if the market opens this way, a good example, like you had opened a selling opportunity at this point, you had opened a trading position at that point, and maybe you had placed your stop loss at this point. At a good example, we say 47, 47. Let's even put it 4800. You had placed your stop loss at 4800. So then the market opened like this. Your trade will not close at this point. Your trade will close at this point, where at 49, around this zone. So your stop loss will just be here. You'll just have lost a huge amount of money than you are willing to risk. Maybe it could have closed at this point because that was the point that it opened at. So anytime that you are opening a trade, you should always be careful if you want to leave it during the weekend. And if you leave it during the weekend, you should be prayerful that the market does not open like this. Because if it does, even though you had placed a stop loss, it will ignore that stop loss and it will open. It will give you a very, very huge losses. So this is just the challenges of the forex market that we cannot control. So, what we are looking at. So though the forex market is is mostly continuous, gaps can occur at a certain condition, and let me give you these conditions so that you can be able to know why the market opened that way. Wicked or market closure gap. So that is the first category of a gap. So explanation yake ni from Friday close to Sunday Monday open, global news can change sentiment drastically. Most common gap source in the market. So like these most of the gaps huwa zinatoka hapa. But for today it is not this gap for today is not a wicked or market closure gap. So market news surprise economy data, it can also cause a very huge gap. So unexpected announcement, interest rates, central banks decisions, and geopolitical shock can shift sentiment and cause abrupt repositioning overnight. So that is so our gap lies under this category. So like our today's gap, major news or surprise economic data. So what was this surprise economic data? So the geopolitical shock, that is what caused that gap to be able to be seen. So then kuna low liquidity periods. So they also cause a gap. That is that category of a gap. And then we have the fourth category and the last one, which is order flow and liquidity imbalance. So If there is a lack of limit orders in a certain price range, then a large market order may skip many price levels, producing a gap. In technical market, microstructure gaps often reflect the absence of the liquidity between the price levels. So that's all about the gaps that we can be able to see, and we can be able to know what to do. So when you see a very large gap in the Euro USD, USD JPY, GBP USD, and other currencies, it is likely reflects some strong fundamental supplies or sentiment shift happening outside normal trading hours, combined with thin liquidity. The market is basically reopening at a new uh, consensus price, at a different price that it had closed at. So what kind of a gap exists and how they behave? So there, like, we have breakout gaps. The market breaks beyond a consolidation or a support resistance zone, signaling the start of a new trend. So then kuna runway or continuation. So gaps. So appears in the midst of an existing trend, showing momentum of the movement of the market. So some gaps can just appear on an uptrend or a downtrend. So then kuna exhaustion gaps. So occur near at the end of a trend and may reverse or signals a reversal. So at this point, for me, as a wise trader, for me, I could only be looking for selling opportunities for the USD JPY. The reason being, the market will try to come and fill this gap. It will do its level best to come and fill this gap at the end of the day. And if it does not, it might fill it partially. So we shall see them. So how to look at trading opportunities for today, so that you can be able to not to be trapped on the wrong side, because today we are expecting a very very high volatility in the market, because there is uncertainties in the market. Remember, today the United States government is at a shutdown, so we still have more data to keep it more volatile, and we are still continuing to receive more and more and more. So this gap was due to the event that took on place on 4th, yenye take place on 4th night, yenye ilikuwa with an issue with Israel and Palestine, the Middle East war. So those are the ones that have been able to cause this gap. But in terms of the currencies, the ones that are dealing with the USD, other currencies are still safe. Other assets like gold, they still safe. It was not affected by that, but it also caused the move to go on the upside. So for today, we are very bullish. Remember the time that there is some geopolitical turmoils. Gold usually tends to go on the upside most of the time. Anytime there is uncertainties that they are not favoring the dollar, that's the time that gold is moving on the upside. So for today, what we should be considering is to look for buying opportunities where USD currency is used as a quote currency, and look for selling opportunities where USD is used as a base currency. So for me, remember, we just do analysis. It's just financial education, not financial advice. I'm not advising anyone to do as I do. You can do your own due diligence and find more better information. And you can still be able to know what to do further if you do your due diligence, so that you can be able still to be on the right trap. You cannot be, the market cannot find you on the wrong side. So for me, just do the technical analysis on the USD, on the DXY, so that you can be able to know. So for me, the DXY, let me return the images so that you can be able to see them, and we can be able to know what to look at further. So and every time that you're doing analysis, you should always be looking at the market in two ways. Don't look at it in one way. So at this time, or at this period, I'm looking at the DXY coming and hitting the zone. Maybe it will hit that zone or it will not hit, then we see a reversal. Or it might even reverse at that point it is. We can be able to see here there was a hunt of liquidities, there was a sweep of liquidities. So, but the market is seen as a very bullish momentum, so we might expect it to hit the zone. This is the technical zone that we are looking at. The market to hit that zone, then we see a reversal on the downside. So that is a technical zone that we are looking at. So if it does not respect that zone, we might expect it to go that way, retracement, then a move on the upside. So if you trade this asset, you can be looking for buying opportunities above this zone and selling opportunities on this zone. Why I don't trade this zone, but most of the time, why I do this analysis for this asset is because most of the time, this asset goes they are negatively correlated with gold. So because this is a USD or is a dollar basket, so it is a very very good asset for you to be able to know where the direction of the gold is heading to, and so that you can be able to align yourself with the direction of the move. So for me, I'm very bearish on this asset. At the end of the day, maybe it might hit the zone, then we see a reversal of the move. So for me, I'm not looking at the day or the time that it will reach here. I just know that it will reach here maybe and reverses. It might even reach tomorrow. But that's the time that I will be looking for some selling opportunity at this asset. More about the time, just be patient with Forex. Then it will be able to reward you with the best it could. For me, I just do analysis on this asset based on 4 hours time frame because that is the bigger trend. I just look at its trend. But at this moment, we might be seeing maybe a sideways moving market, maybe in this zone. You can be able to be seeing a sideways moving market. You can be able to see it. But if it breaks above this, we can be able to see a BOS at this point. We shall be able to know what to do further. We just want to see the image. So for today, the gold is very, very bullish, even more than last week. It is very bullish. So we can be able to go to the 4 hours time frame so that we can be able to still align ourselves further. So still at the 4 hours time frame, we are very bullish. So at the point that we may be looking for a pullback, maybe a pullback to this zone at the breaker block can give us some buying opportunities at the breaker block. But I'm not looking. Maybe it might not go to that point as per now, but it's very near. It's very near. It's very near. So we might see some buying opportunities at that point. So if we align ourselves technically, we can be able to see something like that. So for me, I'm very bullish on the gold. Here there is a bullish pin bar, so that means or that shows there is an upward move of the market. So we might be looking for an upward move now. So then something else that we still need to note, at this point there is an engulfing, and an engulfing is a signal of an upward move whereby it is located at the Asian low. So that's why I have been able to draw it. So that's the projection that I have it as per now. I might wait for a retest to this zone because most of the time when the market is going on the upside, it goes creating higher highs and higher lows. So it might not come to retest to this low that we had here. So it might come and touch this one and go up. So direct to 15 minutes time frame so that you can be able to know further and reduce the risk further. So at this point, I'm looking at the market to come either touch this order block or touch the breaker block. So I'm just waiting. I just wait to see how it will behave. I will not enter the order until I see a reversal of the movement of the market. So that's what I'm looking at it. So you just look at it that way. Then from there, you can be able to be looking maybe at this point. There is something else that I usually like looking at because most of the time, when the market breaks the Asian high on the upside, most of the time goes on the upside. If you can confirm at this point the Asian high, even you can be able to go to the history, you can be able to go and confirming the Asian kill zones most of the time when the market breaks a good breakout. I didn't say kuna zile fake out. I didn't mention about the fake out. I just said a breakout because if you can look at this candle, if you bought at this candle, these were just fake outs. You should look at the momentum of the candlesticks so that you can be able to know what to do. So then at this point, a good breakout of the Asian high is a good opportunity for you to be able to be looking for buying opportunities. Not every time that you should be waiting for it here, but because if as a professional trader, you should be looking at it in different ways because the market most of the time have different ways. Remember, we are using different strategies. So those strategies sometimes they fail you, but if you try to use to add something in your strategy, you can be able to be seeing something more meaningful in the forex market. So a good example, like in the 1 hour time frame, you just saw a bullish pin bar. In the 15 minutes time frame, you have just been able to see a bullish engulfing candlestick. And still, even the 15 minutes, there was a red candlestick here, but it was a bullish pin bar. So this gives you a confirmation for a buying opportunity. So at this point, it's a good buying opportunity. So, and if you just look at it that way, you can just be able to place your order here, maybe at the current price of the market. Maybe you target maybe like a good example, you risk according to the way that you're ready to lose. Don't risk more than you are willing to lose. Okay, 300 pips. Targeting a good example like 200 pips. A good example, 200 pips ends up at that point. You can be able to be knowing where to look at. But for me, I'm very bullish on gold due to those geopolitical events. When there is some wars in a certain region, so a good example, when you press an order here, I just explain how we are going to look at it. So when there is some war or some geopolitical events that are happening around the globe, most of the time gold is a safe haven asset. It's the asset that mostly is used, and gold does not define the country that it came from. Gold is just gold, and it is an asset that is used worldwide. So gold as an asset. So being an asset, that means those countries that are at wars, they are using gold to purchase war instruments like guns, uh, bombs, and grenades, and other like tankers. Those countries that are at war are using gold as their mean of transaction because that is the only currency available because their bank they are already closed, so their currency is not active. So what they are using at the moment is gold as a medium of transaction, like the way here we use Kenya shilling to buy products in our shops. So a good example before we continue saying is a buy, so that we cannot be able to trap ourselves. So we just need to look at the forex market, and we can be able to see it's a very bullish market. We just pressed it at this point, and it is moving on the upside. So it's not a good move. It's not a bad move. It's not a bad move. So we can still be targeting at these highs, the previous high, so that we can be able to be knowing what to do when we have it. So at this time, I just want to cross it at that because we have just been able to look at it technically. So then we have the all-time high at this one, but don't label it at the moment because the market is still continuing to the upside. So just label it as the all-time high as per now. But whenever the market goes up, I will just be extending it to the upside. So the all-time high. Then we look for a good move. But for this trade, you can be able to ignore it because you can be able to ignore it because it's very slow and the market is consolidating at this zone. So at this point, ignore this trend because there is no volume in the market. Because if you can look at the volume section, there is no volume that is moving the market either on the upside or the downside. So this trade will stay a very long time in the market watching the trade, and you should be looking at the trade at a period that you have a very high volume. As per now, just ignore that trade because there is no volume in the market. The market will just consolidate maybe for a while until maybe we see a breakout during the overlap of the New York session and the Radian session, but we can still see it on the Radian session. The market is not predictable, so we just align ourselves with it because we cannot control it. We just do whatever it is showing us. But at this moment, it is telling us don't make any decision. Don't make a decision for buy or a sell. You just accept. But if you go in the 15 minutes time frame, you can be able to see a different information. But that's we wait for this candlestick to cross, then we know what to do. So if this candlestick grows as a momentum candlestick with a with at least some volume, you can be able to buy. But in terms of 5 minutes, it is an indecision. But if you can be able to look at it, remember every time that you are trading as a trader, if you trade with 5 minutes time frame or 15 minutes time frame, what you should be looking at is not going backward. You should be looking at 30 minutes. You see, I saw a bullish candlestick on the 15 minutes time frame. Is it the same on the 30 minutes time frame? Then is it the same on the 1 hour time frame? Then is it the same on the 4 hours time frame? If you see that they are all bullish, there is nothing bad to buy that asset because the market is bullish. It has already confirmed to you in 3 hours time frame. So before even you press a trade, ensure that you confirm in the four, like if you are trading the 15 minutes, confirm in the 15 minutes is bullish, 30 minutes is bullish, 1 hour is bullish, and 4 hours it's bullish. Three time frames above your the market or the time that you are pressing the order with. So you should confirm before placing an order. So that's how you should be arranging yourself. Because as per me, you might be targeting. I'm targeting this Asian high, so I might wait it to maybe to just shall retest at that point because it is still at the zone because I'm looking at this Asian high, targeting the zones above. So I'm very bullish on gold. Very bullish. So just want to wish you a beautiful day and a blessed one. May God bless you all. Remember to like and also subscribe to the channel. Goodbye. I wish you a good day.